Casey is with Hanghold Capital Management. And Casey, I guess the competition is over, and the winner in the Wall Street Journal's Winner's Circle survey of the best actively managed stock funds would be
the Aegis Value Fund. The fund is up 60% at the end of September. Hey, where do I sign up for this fund?
Yeah, no kidding. 60%. The problem is we have to look at how they do over time.
That's right, because when you look at a longer-term basis, I mean, this guy's had some phenomenal returns for periods of time. I mean, he was hot from 2009 to 2012, but in 2014, the fund lost 26%, and in 2015, the fund lost 24%. So this has been a fund that's been extremely hot. It's been extremely cold. It's very streaky. It's not worked out well when you actually look at how investors have done when you look at their performance.
2014 and 2015 were not bad years. That's a chunk of money to lose.
It is, and when you look at the last 10 years, the actual fund has averaged 6.2% per year in performance. But when you look at the average investor performance, what they're getting their share of the return, they've been averaging 2.9% per year. So the average fund investor over the last 10 years, they've not even reaped 50% of the fund's return during that time frame. And to add insult to injury, this fund manager, they've been in the 64th percentile over the last 10 years, which is not that good.
I guess another problem would be when people choose to buy a fund. They look at something that's performing really well and jump in pretty late.
That's right. So when I saw the headline of this is the recent winner, I'm always fearful of, here's another example of somebody buying things at the wrong time. We saw it with the technology bubble in the 90s, even with mutual funds that tracked indexes of the overall market back in 2008-09. So you've got to do your due diligence. You want to look for some level of consistency and performance over time. Understand the strategy. It's one of the biggest mistakes people make. So don't look for hot managers. Look for low operating expenses. If you play the game of hot investments, it consistently leads to underperformance.